Hey everyone, welcome back to Corporate Decoder, the place where we dissect corporate filings so you don't have to. Today, we are diving into a report from Putnam VT Small Cap Growth Fund. Is this a hidden gem or just another small fish in a big pond? Let's find out. This report covers the year of 2024, so we are looking at how they performed recently. The fund focuses on small, growing companies. Think of it like betting on the underdog, hoping they will become the next big thing. First, let's talk about costs. Everyone wants to know how much it costs to play this game. For every $10,000 invested in Class IA shares, it costs about $98. For Class IB shares, it is around $126. This translates to 0.88% and 1.13% respectively. It means that for every dollar they manage, roughly 1 cent goes to operating expenses. So how did they do? Class IA shares saw a return of 23.67%, which sounds pretty good. They measure themselves against the Russell 2000 Growth Index. This index went up 15.15%, so Putnam did outperform it. What drove those gains? The fund's success was boosted by its investments in companies like Comfort Systems USA, an HVAC or heating and air conditioning company. They also did well with Carpenter Technology, which makes specialty metals, and Vertex, which provides tax compliance software. Having more of these stocks helped drive up their returns. However, not everything was sunshine and rainbows. Some of their investments didn't pan out. Positions in Cytokinetics, a drug company, Weatherford International, an energy services company, and Evolent Health, a healthcare provider, dragged down overall performance. By investing more in these stocks, they lost out on potential gains. Looking at the bigger picture, how has this fund performed over the long haul? A $10,000 investment in Class IA in 2014 would be worth roughly $25,734 at the end of 2024. That's not bad, but let's dig a little deeper. Over the past 10 years, Class IA shares have given an average return of 9.91% each year. Keep in mind that this performance doesn't consider any potential tax implications, which could lower returns. The total value of everything the fund manages is around $34.6 million. To get a sense of how actively they are trading, their portfolio turnover rate is 61%. It means that they replaced more than half of their holdings within the year, which is a fairly active approach. Where is their money really going? A large chunk, 15.7%, is in software companies. Next, a little over 27% is in consumer discretionary and 23% in healthcare. Another big chunk is in industrial and information technology, accounting for roughly another 10%. It is a mix, but has a heavier concentration of investments in technology. Now for some behind-the-scenes changes. There was a big merger involving Franklin Resources and Putnam. As part of that, Putnam's investment advisor and sub-advisor became subsidiaries of Franklin Templeton. Think of it like a family getting bigger, with some shuffling around. They also retained Franklin Advisors as a sub-advisor and appointed William Monroe and Tania Harsono as portfolio managers. For those who want to dig even deeper, more information can be found online, including the fund's prospectus, which is like a detailed manual for the fund. Now let's peek at the financials directly. The fund holds investments in securities worth over $34 million. This includes over $300,000 in securities that they have loaned out. They do this to generate extra income, but it also introduces a little bit of risk. The net investment loss was about $214,000 for the year. It may sound bad, but it is important to remember that this fund seeks primarily capital appreciation, which is the increase of stock prices over time. However, they had a net gain on investments of over $6.6 million. This led to an overall increase in net assets of over $6.4 million due to their strategic trading and investments. Finally, the expense ratio, which we talked about earlier, confirms that it costs just under 1% to run this fund for Class IA. It means you are paying about 1 cent per dollar for management and other costs. Now let's zoom out and assess the direction of Putnam VT Small Cap Growth Fund. The fund has some clear strengths. They seem to be actively managing their investments, outperforming their benchmark index. Their focus on small growth companies gives them exposure to potentially high growth areas of the economy. On the other hand, that higher turnover rate and also the risk of investing in smaller companies means it is not the safest bet. These smaller firms can be very sensitive to economic shifts. There's also the fund's relatively small asset size. With just $34.6 million, it lacks some of the scale and resources of larger funds. Overall, Putnam VT Small Cap Growth Fund has an interesting but risky approach. Their active management and focus on small companies can yield good returns, but are more likely to underperform in downturns. This might be a fund for those who have some risk tolerance and are looking for growth potential. Thanks for watching. If you found this breakdown useful, please like, subscribe, and comment below with what reports you would like me to cover next.